Former mayor of New York City, Michael Bloomberg, current billionaire and the guy who got to be that rich by selling Wall Street, the Bloomberg terminals, decided that he was going to go speak to people who were involved in finance. He was speaking at the Securities Industry and Financial Market Association's annual conference in New York. And shockingly, he thought that the banks were having it so tough and that the government wasn't allowing them to make enough money. He said, quote, "If you reduce the risk," referring to the regulations that make the banks hold more money so they reduce risk, they can't make the money. They can't provide the financing that this country and world needs to create jobs and build infrastructure and all of those things. Now, there's two comical things about that. One is, oh, these poor banks, all they want to do is loan out the money and so that good business owners can build things and the government can build infrastructure. Really? Because when we go to ask to build infrastructure and bridges and all that, you say no. The Republicans say no under all circumstances. Bloomberg's an independent, but on on financial matters, he's very conservative. Wall Street says no. They give all their money to the Republicans, right? Most of it, at least. Now, the second comical thing is the bankers were not allowed to make money. That's weird because we kind of have graphs showing otherwise. Let me show you the first graph here. This is a graph of two things. The top line is financial profits for the U.S. Okay, so you see the big dip during the crash, happened under Bush, and the great Republicans who theoretically were great for the banks and the economy. That was a crash. And then, of course, it recovered under Obama, did well. And now the second bottom line is financial profits. Yes, they crashed during the crash caused by the banks. That's unsurprising that they would dip. And then guess what? Not only did they bounce right back up, they're now at a higher place than they were before the crash. So the bankers are actually making more money under Obama than they are under Bush. So where's the part where they don't get to make money? You see, that would be colloquially referred to as a lie. It's meant to soothe the bankers like, oh yeah, the government's so tough on us, poor us, we're the victims, boo-hoo. And it's also supposed to trick you guys to say, oh my God, Obama, what a socialist. Yeah, he really took it to the banks. No, he didn't. The banks love the position they're in. Would they like to make more obscene amounts of money, be even greedier? Yes, but that involves taking risk. And even Michael Bloomberg says that. He wants more risk. You want more risk in the system after that last crash? You ought to have your head examined if you do. One more chart here. This is the economic recovery and finance's share of total U.S. profits. So they're doing unbelievable. I mean, this is record-breaking for history before the crash. Obviously, their share of U.S. profits for the finance industry goes down during the crash, and then it bounces right back up to where it was. So it is completely untrue to say that the banks are not doing well. They're doing just as well as they did before. But if all of that wasn't enough, I want to give you one last note here from the Huffington Post that covered this story. In 2008, the bank, referring to J.P. Morgan Chase, lent out just under 75 cents for every dollar of deposits it took in. It is now lending out 56 cents on the dollar. Though J.P. Morgan's deposits have ballooned, the most profitable investment for it to make with those deposits aren't loans, but instead things like credit derivatives. Two parts of that. One, all that talk of Bloomberg, like, oh, we just want to take the money so we can lend it out to you. Bullshit. They want to take the money and not lend it out to you. They're lending it out to you at an even lower rate than they did before the great crash. It's not a good sign. So what are they doing instead? Credit derivatives. Why did we crash back in 2008? Credit derivatives. But now it's on a bigger scale. And they complain that we have limited their risk-taking. Are you effing kidding me? It's never enough for the big banks, and it's never enough for their political, powerful benefactors like Michael Bloomberg. More, more, more. If it crashes again, who cares? We already took the money home. You'll have to deal with the consequences.